Okay, guys, so today we're gonna talk about precise entry and exit, right? This is our main agenda today, since most of you want to know on how you could entry and precisely exit at the same time, right? So, for an example, okay, let's take this market. Okay. So let's just take this time frame of a market, okay? This time scale from the 7th of June during NFP till here, till the 13th of June, Thursday. So that's roughly a week, all right? A week. So here, everyone was expecting a buy in this particular position, right? Everyone was expecting a buy. So I saw a lot of people buying at this particular position. And I know very well through the screenshots and also throughout the conversations that I had with a few of you, you guys were expecting a buy. If not, you guys actually executed buys within these two zones. All right, here is a starting of a gain. All right, here you can see the market flagging, bullish flagging, boom, breakout of the most recent resistance, came back, retested, and then created a breakout that continued till here. All right, this is when before NFP. All right, and this is the continuation after NFP. So here in this position, right? Regardless of what happened on the first left, you already know that here it is a resisting point. Why is it a resisting point? Because the market had showed us a high momentum seller here. Look, high momentum. Let me zoom it in so you guys can see further. High momentum seller here from this particular price position till here. All right. This is one candlestick of a momentum. And then after that, it did the collection, boom, another breakout, collection, another smaller breakout. Then this one is the continuation process of the bear. All right, bear meaning this is the selling continuation process. And then when it created here, it created another support here. All right, it changes into blue. So how do you know? All right, how do you know when you're supposed to hold or when you're supposed to exit? And how do you know when you're supposed to entry? All right. You're supposed to enter when you see this, guys. Here. This is what we call a hook. All right. A hook is when there's not much buying momentum. Not much buying momentum. It's hooking, hooking. There's no breakout. Breakout, rejection, failure of a breakout. Breakout, rejection, failure of a breakout. Do you guys know what OHLC is? OHLC. Do you know what OHLC is? Open high and low close. Do you know? Yeah. So OHLC is basically the movement it makes. All right. Yeah, Bebo. So the movement that it makes. So like here, for instance, this is an imbalance, right? But it closed as a bullish candle. Closed as a bullish candle. And then this is an imbalance, right? It showed that prices went down, up, and then down, closed here. This one, it went up, went down, up, closed here as a bearish candle. That is what OHLC is. All right, I'll zoom. Here, the movements that it makes is basically like this. Okay, here, let's start here. Okay, here, the bullish candle closed here. All right, it opened here, it went down, came back up, and closed here. Here, it opened here, went down, came up, closed here. Same thing. Went up, down, closed here. So that is the movement that it makes, okay? That is the movement that it makes. That is what OHLC stands for. All right, open high, low close. So you need to know and understand how does the market react. So here, this is a buying zone, right? Buying zone. So as it enters the buying zone, prices are showing you, all right, trying to manipulate you into thinking that, oh, it's going to be a buy, right? So prices will close here, open high again, and then you can see this by the week, okay? By the week that prices actually went up to here, collected this resisting point. But at this particular point, you don't know, all right? You don't know what is bound to happen because this is a basically a slowdown of a momentum within the bearish momentum. It's slowing down. So it's 50-50 at this point. You don't know whether it's gonna fly up or you don't know it's gonna go down. But on the bigger picture here, you can see that there is a high bearish momentum, high bearish movement here. So as and when it tried to create a bullish outlook of the market, it tried to reverse this resisting point that at that particular time we did not know, right, was going to collect this price point and create another particular breakout here, right? This is considered as a breakout. This movement, boom, high momentum breakout. And then another bullish candle came in. But is this a breakout? No, it's not a breakout. And then another one came in, but not a breakout. Hence why the bearish momentum came in and pushed the market more downwards. So let's say you want to enter a buy here. Is there a reason, guys? Let me ask you. Is there a reason for you to enter a buy here? We're talking about this particular time frame, this particular time scale here. Forget about what's going on. Let's say the market is here. Okay? Yes. This is the 5 minute. This is the 5 minute. Guys, I'm asking you a question. Bro, I can't hear the voice. Joshua, you need to connect. Hold on, yeah. Can't hear the voice. Okay. Guys, I'm asking you a question. Is there a reason for you to enter here? A buy. Because it's a buying zone. Is there a reason for you to enter? Yes or no? Yes, there's a reason for you to enter a buy. Yes? Why is there a reason for you to enter a buy here, guys? I just taught you that there is a hook and there's no bullish momentum at all here. So why do you enter a reason to buy? I don't find any reason going for a buy because of the rejections. Yes. No need to wait the confirmation. Yes. You need to wait for the confirmation. No. Even yet, the candle closed at bullish pattern. Yes. Candle even yet, the candle closed at bullish pattern. You mean here? It's showing that prices are going up because it's closing above and above. But is it closing above the particular resisting point here? You have to always check left and right, left and right. Recent candle and the current candle. Recent candle, current candle. That's how it works. You have to look at both. And right now we're talking about technical analysis, right? Fundamentally, we already know that prices were bound to fall because of this, all right? This is the chow down. This is where they threw down, all right? They threw down, gold prices were going down because the USD was going up, all right? And then it is still respecting, all right, the trend line. This is how you draw the trend line. You take the price, all right? The price where it started, you need to at least connect them with 3, all right? 1, price, 2, 3. There we go. All right. So it is still respecting the trend line. All right. Respecting. But this is the lower time frame M15, M5 trend line. On the M5, you can see that the trend line started from there. Right? And here, on the M15, it started here. Right? And then still respecting the trend line until it reached into this supporting zone. All right? There's a supporting zone here. And then it created a supporting base. All right? This is the base because it's not touching the base at all. All right? Even then, even up to current market prices, it is still not touching the base. All right? Okay, let me read out. But overall view is a bullish market, so why shouldn't we be only looking for buys? Loss recovery completely. Okay, but on the overall view, it's a bullish market, so why shouldn't we only looking for buys? Okay, it's simple. Let's say you only look for buys in a bullish market, right? You only do that for the entirety of your trading session. You don't look at current market structure at all. You look at the bigger time frame, which is this, the daily, right? You can look at the daily here, right? You can see a bullish market, but at the same time, it is creating a bearish outlook, all right? It's creating a bearish outlook within this bullish market, all right? Every time it lands into this support, it created a bull, all right? A bull run, boom, bull. Here, bear, bull. What we want as traders is we want to be able to collect from both, all right? We want to be collecting from both. We need to differentiate between it's a short-term trade or is it a long-term trade? Are you doing a day trade or are you doing a swing trade? A swing trade can be done already from the prices of the lower lows, all right? This is when you're swing trading. But for us, how are we supposed to wait for the price to go down if the prices are not going down? So what we can do is we trade from the current market outlook and current market structure. All right. Even when we trade from the current market structure, we can gain so much from it. All right. So much from it. Please talk about how to draw support and resistance when it comes to different time frames. Okay, you just made a statement that USD was going up. How can we interpret the information we get from the XY chart and the correlation? So technically, the correlation sometimes it's not fully correlated. Okay, so I made a statement that USD was going up, but the USD was going up not just within the chart, all right? It's also within the fundamental statements that were made, all right? So whenever you look at the USD, you don't look at the charts and correlate it with gold, all right? It doesn't go hand to hand, all right? Sometimes when USD is going up in DXY chart, gold is still going up. Okay, the correlation is not accurate, so you cannot use that. You cannot use that fully. It's not fully correlated. What you can do is you can read out the fundamental outlook, all right? The fundamental outlook of what is going on within the USD. Are there high indications that the USD is coming down, or are there high indications that the USD is coming up? Okay, so from there, you can also see from the DXY chart whether USD is going up or down. But current and direct correlation, I don't think that it is fully directed to each other. You need to understand that. So please talk about how to draw support and resistance line. Can we go for longs or 2294? 2294. So meaning, can it go down to 2294? There is a high chance, but you have to wait. Okay, for now, on the high time frame, there's no buying breakout. So it takes time for the market to structure. Here, there is a zero buying breakout. All right, you can see there's a buying breakout, but it's still within this particular market. All right, this is still within this range, as you can see here. Even on the higher time frame, you can see still within this range. Because why? Because here it created a drastic bearish outlook. All right. What was the cause of the price to drop? So the price would to drop. This one was during NFP, all right, the non-farm payroll. So during the non-farm payroll, you can see that the data outlook is showing the USD to bump up. So when the USD is bumping up, the correlation is gold will go down. So as that big market decider, all right, this is the big market decider, it went down. So that is why gold is hard to come up. All right, it's because every single time it reached to this particular SBR zone. All right, this is the SBR zone. It created a bearish outlook. Bearish outlook. So this is the current price drop. Okay, the current price drop is simple. Here, last Friday, not last Friday, last 2 Fridays, if I'm not mistaken, last 2 Fridays during NFP, you can see here is a resisting point, right? Here, resisting point. How many times did gold touch this particular resisting point? Once, all right, once. Once during the news here, it went up, did not create a higher breakout than this. There was no breakout whatsoever, no breakout, right? And then prices went down here, which is considered as a high momentum seller. Second collection of this resisting point, prices created a breakout. And then the continuation process came in. All right, it continued going down. And then this is another news. And then it went down again. It went down, continued going down. And then this is the second entry. This is the second time it entered into this resisting point. All right. But what we do as traders is we look at the first left. So here, you can see a high momentum seller here, right? So regardless of what happened beyond that, we can tell here that there is a resisting point. And as you can see, it is not breaking above or beyond this resisting point. It is still respecting this lower time frame and always higher time frame resisting point. See, it is still respecting. All right. Let me remove this. It is still respecting. First try, second try. And now prices are going down and down. But here it is still reacting to this support. Why? Because here you can see that there is a high momentum buyer. High momentum buyer. So hence why I'm saying that we are still trading within this market range here. All right. From last 2 weeks until today, we are still in the same market range for gold. All right. So when you say, how do you know when to enter and when to exit? Okay. So when you enter at a particular resisting point, right? I go for sell here and then market is just ranging, right? Ranging, but it's closing below the resisting point, right? That is when you know you're supposed to have your risk assessment ready. So if it breaks beyond this resisting point, you know very well that you have to cut. All right, you have to cut and you have to set your SLs within your risk management, within your account. So it depends. There's different risk assessments that you can use for different amounts of capital that you use to trade, right? So let's say it breaks beyond, then you have to cut or you have to set your SLs. You have to minimize your risk. But here, what you can see from the market outlook in this particular position, right? In this point of view, let me just turn it into red, all right, is that the market is still closing below this resisting point. Can you see? Can you guys see that? Guys, I'm asking you a question. Can you see that it's still closing below the resisting point? All right. Even though it goes down, all right? Even though it goes down, like probably around 10 pips. Look, from 3.5 to 2.5, 100 pips, sorry. Even though it goes down around 100 pips, right? 100 pips. You can collect and there will be always a retest. Yeah, there's always a retest. And then you can re-enter because you know very well the confirmation is there is no breakout. When you re-entry, you can get another 130 pips. Or after you get 130 pips, you know that the market is not ranging as crazy as this anymore. All right, it's not ranging as crazy. Breakout, pullback, breakout, pullback, breakout, pullback. Whatever it is, all right, whatever it is, under the influence of high impact news, that there will be no retest. It's going to take like a longer period of time for it to create a retest. But on normal market days, there's always going to be a retest. It's because, you know why? Because the market suggests that sometimes people, even though big bankers, you know, big market movers, they might miss. All right? They might miss. TPs in case you placed the last trade this morning. Yes. So you might miss out on the chance. All right. You might miss out on the chance. So the retest is the market correlating with each other. It is still compressing within a particular area. And then you can go. Can you go for long? You can go for long because here suggests that it is a high momentum seller. And then it is still respecting this particular resisting point here. All right, guys? Still respecting. High momentum seller, retest, same thing, right, guys? Same compression, same correlation to what happened here. Same thing, because why there was no news? Still the same, and then boom, it went down, lower. Now it's still going down, lower and lower. All right? Hold on, yeah, guys. Let me just update this. So, whatever it is, whenever I give you guys cells, right? There's always a reason why I give out the cells, right? So let's say, okay, you have an account, $100 account, and you want to follow proper risk and money management. So you were to place here a single trade of, change this to dotted lines, right? Okay, you put 10 entries of 0.01. After 100 pips, all right? After 100 pips, you collect and then you wait for the next confirmation or you wait for the next instruction given by me. That would give you, okay, 100 pips. Okay, 100 pips, 10. That's around 10. That's $100 already. All right, $100. 100% of your account. And if you were to just leave your account and collect half, that'll be probably $50 or $75. On the next instruction, you put in the same amount or not more because you had increased your capital. You put in another 15 cents and then it goes down to our TP1 and you collect half and then you collect half of our TP2, right? So that when I give you TP1 and TP2, it's your choice whether you want to collect it because I've given you the profit already. And if you want to still hold, you can hold it based on the analysis given. All right. If you were to analyze the charts at every given time, you would know which particular position to hold. Here, I've already taught you. It is simple because it is closing below the resisting point. All right. There's no fake outs. There's no breakouts. All right. It's simple correlation. And then it went down, continued to went down, down, down. And then it created a breakout of the most recent support. Here, breakout. And then a retest and then another momentum collected this particular bullish engulfing pattern, right? But it is still not breaking this resisting point. And then high momentum seller came down, retest another market, suppression, meaning that market is still ranging, boom. Then the momentum came in. All right? It's as simple as that. You don't have, all you need to do right now is analyze and also give yourself some room and time to adapt to what's going on. All right? Because this is not quick, guys. It's going to take some time. Look, this is probably how many hours? How many hours did it take for it to actually go down? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It's almost a whole day. All right? Almost a whole day. So it takes time. It cannot be quick. Sometimes we are given the, we are given the advantage whereby the market moves really quick. Sometimes we have to wait. Sometimes it gives high momentum. Sometimes it gives you low momentum. So you have to understand what current situation that you're in with your trades. All right? You have to understand. That's why whenever I say people think that, trading is a simple thing. You just trade and then you can make millions and millions. But they don't understand it takes a lot of time. All right? It takes a lot of time. Like this. For instance, we got 300 pips within 30 minutes, guys. 300 pips from the sell on the Friday, 300 pips within 30 minutes. And it took us how long to get 100 pips? It took you more than 7 hours, 8 hours to get 100 pips. When here, it took 30 minutes to get 300 pips. And then it continued to go down throughout the whole day, 17 hours, 1,000 pips. Don't you think it's different than other other timings within the market? It's different, right? 17 hours, this one takes 1 day or 2 days. This one takes probably a day for it to correlate and for it to go down. So you are not given the comfort of the same exact market momentum, the same movements when it comes to gold. Because you don't know the timings of when the big players are putting in their trades. Sometimes we hit SLs because the big players are doing their profit collection. All right, profit collection is when you have a particular resisting point, but prices are spiking above and beyond your resisting point, hitting your SL, and then it creates another momentum seller, and then it continues. That is profit taking. All right? Because you have to understand, in the financial world, everyone works together. The brokers works together with all these financial institutions. All right? So they know what is bound to happen in the bigger picture. But for us, for people who are holding small accounts, all right, it might be a little more sophisticated and hard because we don't have the capacity. All right? We're not versatile enough. Our accounts can't be versatile enough because we can't hold much, but they can hold. All right? Is that understood?
Understood.
Yeah? Okay. So in terms of entry and exiting, it's as simple as knowing your resisting points and knowing whether prices are closing above or beyond your resisting point, above or beyond your supporting line. It's as simple as that. But as simple as it sounds, it takes time. So during those times, you are being manipulated by movements. All right? Movements after movements are making you scared, is making you, is convincing you to not hold, is convincing you that market is bound to reverse. Let's say you take a sell here, it's convincing you that the market is coming back, it's suggesting that prices are bound to break and it's going to break your account and you're going to lose your money. All right. That is why we use proper risk management strategy. All right. If you don't know regarding risk management strategies, I have so many webinars. We have videos. I have videos on Instagram. I have videos on YouTube, my webinars for you to assess those risks and create your own strategy based on your own capital account. All right. Meaning that how big is your account and how well can it manage? All right? You need to understand those terms. Are we clear here? Okay, good. So in terms of entry and exiting, do you guys understand how can you dominate that particular concept? Dominating that concept takes you to analyze the candle movements, closures, momentum, structure, whether you are selling at a right point or you are not selling at a wrong point. Not really. What do you not understand? Update. What don't you understand? Support turn resistance. Must the price there so to break it? What if it continues in the trend? So if the price breaks the swap zone, right? The swap zone of the supporting line turns into a resisting SBR. If it breaks, then you know that particular SBR zone is not valid. All right? It is not valid. You know very well that that particular swap zone is not valid. Entry, maybe I get TP2, but SL is hard to understand. So SL is, for instance, right? Here we have a resisting point. All right. How big is the resisting point? 39 to 35, 40 pips. 40 pips resisting point. Okay. So sometimes, as you can see here, all right, sometimes when prices are manipulating, it will go above and beyond, all right, a particular resisting point. So the movement will go like this. Boom, boom, and then momentum comes in. And then another movement. And then comes down. And then movement. So when you were to put your SL, all right, you put it roughly around 10 to 15 pips above your resisting point. Hence why I got the, okay, let me change this to black line. Okay, so 39 to 40, right? Hence why I put my SLs at 50 pips at times. Sometimes my SL is 20 pips, sometimes it's 30 pips. All right, it's determined by when I enter, at which point I enter. That is the particular position that I will set my SL depending on the resisting point or the supporting line. All right. I have to make sure HH done. What is HH? Higher high? Higher high, right? Yeah. Okay, okay. So basically, you have to wait until it collects the higher points. All right. So when I tell you, guys, it is safe for you to sell now, it's because I've entered myself and I'm constructing the zone for you so that you can determine where are we selling, which resisting point, and you will know all of this process that is bound to happen. All right. Hence why I give you reason. Hence why I give you a particular SL at a particular position. Because you will know, all right, whether it is a safe trade for you to enter or whether you have missed that trade or you're waiting for the next confirmation instruction given by me. So we don't want to put our SL here at the edge of the resisting point because we know the market manipulates. The market can go high and then close below like this. What is the point of collecting up here and for it to go down? There is no point, but there are prices within these candles that we don't know of. All right, order blocks. Like someone asked me about order blocks, right? So order blocks is you look at the prices within this particular candlesticks. There are different order blocks. All right. When is the prices compressing? When is it suggesting a slowdown process of a bearish or a bullish run? Is that clear? Update. So sometimes when it hit our SL, it's because we have to clear that setup. We have to clear that setup. When that setup is clear, all right, when that setup is clear, we move on to the next one. All right. that's where recovery comes in. And then sometimes you can gain a lot more from the recovery, or you can break even with your capital and then you go to the next one. So it's not fully 100% that you can achieve that profit run. All right, sometimes you have to go through the losses because of this. Because of this. What you know is your analysis is working well to what you had adapted through experiences. You understand, okay? You understand what's going on and you understand why is it hitting your SL. So you push all emotions aside and then you understand the particular concept of what is going on within the market. So when you are confident in that way, you understand why it hit your SL and why are we going for recovery at this particular position? Why are we going for a resell? Sometimes we sell, it hit our SL and then we go for another sell. It's because of this. So talking about entry and exiting, yes. So we put our SL according to our analysis or we use yours. Depending on where, Josh, depending on where you place your entries. All right. If my trade hits SL, then you know very well that you should cut. Maybe your entry is higher than mine. Maybe your entry is lower than mine. Right? But that particular SL that I gave out is the point where if it breaks, then we have to look for another setup. All right. We have to wait for a new refreshment of the market where we can create another setup out of it. We cannot just rush it. Sometimes we can, let's say if there's a quick market reaction, right? Whereby it hit our SL and then I see it constructs another selling breakthrough, then we can go for it. So when you say TP1 and TP2, what should I do in terms of placing the trades? Should I and choosing to stop in TP1 or continue to TP2? Okay. What if I layer that manipulation? You can if your account is sustainable enough to sustain any type of movement. All right. So let's say I hit SL, right? I hit SL. And then you think, and then after that, for a time being, I came up with another selling setup. And then at that point, you are still holding your trades, right? That means that based on my analysis, given that you have yours, based on my analysis, that there is a high chance that prices are bound to fall again from there. So you can start layering if you want to, and if you are still in trade. Get it, Abdin? So when you say TP1 and TP2, so if you have 10 entries, Atif, if you have 10 entries, and you want to collect first, because in a day, I give you like 6 setups, all right? Sometimes 7, sometimes 8, but around the range of 5 to 8, right? If you want to collect half at TP1 and then set break even for it to hit TP2 or even hold it without break even so that you will hit TP2, you can. But you have to have and create your own analysis as well. You need to understand what's going on within the market. You cannot just hold it and then say, oh, because King Aussie put TP2, 100% is going to hit TP2. Sometimes it doesn't, sometimes it does. So that's why I segregate. Segregation means that I will put, let's say I have 100 entries, right? Or maybe let's use a lower number, 10 entries. So I'll segregate 5 entries at TP1, 5 entries at TP2. If I have 20 entries, 5 TP1, 5 TP2, 10 I hold VBE to go. Let's say if it can go lower than that, we go lower than that. Kindly give me a contract. Kobe, you can just contact me through the Telegram. I will talk to you through that. All right. I can't catch your trades. So how do you do confirmation entry of 1 minute to 5 minutes? So 5-minute time frame, right? 5-minute time frame, what you look at is rejection and what you look at next is momentum. It's simple, all right? It's simple. When you look at 5-minute, the only difference is there's less movement on the 1-minute candle than the 5-minute candle. Okay? Zoom out. Here. It's almost similar to the 5-minute candle. As you can see here, it's almost similar. Here, high momentum. When it re-enters, you place in your sell, 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 sell. Is it retesting? No, because it already tested this particular resisting point. So normally there will be a second, all right, a second or third try. More than the third try, you cannot validate that particular zone anymore. All right, because that zone is a high chance that there is gonna break that particular zone. For a resisting zone, it's gonna break upwards. For a supporting zone, it's gonna break downwards. All right. So King, how do you determine your trend to choose when to buy or sell? So I determine the trend based on market structure. Let's remove everything. Is it okay if I remove everything, guys? So it's clearer because right now we explain a lot of things at once. So it's a bit more sophisticated, yeah? Okay. So let's say one by one, yeah? So the biasness, all right, there's no biasness, but there is the biasness of a market. So here you can see high momentum seller. All right, from a bullish run, from a higher time frame, you see a high bullish run, a high bullish run. See, high bullish run, but it collected the resisting point over here. All right, and then you saw momentum, high momentum seller. So this is what you should see, okay? At the time being, you should only focus on what's going on here, all right? With reference of why it happened over here. All right, this is reference. This is current market. So if you want to determine whether the market is going to fall or go higher than this, you have to use references, meaning your historical price points. Knowing that, okay, here, you already know that there's a high chance that prices are going to fall. So when it re-enters here, what do you look at? You look at price action confirmation and you look at momentum. And after you look at price action confirmation and momentum, you wait for the right time to enter. Here, it gave out a high momentum seller. So when it gave out the high momentum seller, there's no way in hell that you will know that prices are bound to go down even lower from here. So why take the sell? When you can take the sell on the second time it retests. All right, breakout, pullback, entry. Entry here, and then the prices will definitely go down without retesting. All right, on the H1 M1 time frame, it does the same kind of reaction. Okay. Same kind of reaction. High momentum seller, retest, slow down of a momentum. Look, it's slowing down. Bullish is slowing down, slowing down, slowing down. Boom, high momentum seller. Slowing down, fake out, boom, high momentum seller. So it works the same way, right? M1, M5, M15. The only difference is it's clearer on the M15 candle. That is the use and the utilization of these two, the time frames. It's for you to see a clearer picture than for you to just focus on the 1 minute chart. All right? Is that clear? Colin. I don't do copy trades, but I don't know. Maybe I'll think about doing copy trades. But for now, I don't want to do copy trading because it's too easy. Basically, you pop your money and then it will just go up based on our trades. So I want you to here, okay, here in GKO, what I want is to create traders. All right, I want you to be able to analyze and use that information to adapt to the markets so that you can learn so many other exchange markets out there in the world. All right, and you can trade those markets without copying my trade. I'm giving you the experience and I'm giving you the knowledge at the same time. I'm not just giving you money. All right. I'm giving you experience and the knowledge at the same time. So it's clearer. All right. If I were to give you money, even when I give you giveaways, $100 and stuff, you guys still don't want the $100. Yeah. Thank you, Abdi. Thank you. So are we clear on that? You're welcome. Are we clear on that? Colin, anytime. So what books do I recommend? They will still blow that. Don't say that, man. That's rude, bro. Don't say that, bro. That's rude. Okay? All right. Okay. Wait. Joe, sorry. What books do you recommend? For me, the first book that I read was Trading in the Zone. All right. Trading in the Zone is a good way for you to understand the trading world and also the financial literacy behind trading. All right. So you basically use the 15-minute chart as your major chart and the 5 minutes. Yes, correct, FX. Correct. Please, from what time frame do you start analyzing from? So let's say we start in the day, right? We start, okay, today is a new day. All right, today is a new day. So today started at what time? It started earlier, but we begin at 2 o'clock, right? So here, 2 o'clock. So what's your first left do you see on your 2 o'clock time? What do you see? Do you see any bullish momentum here on the higher time frame? You don't see any bullish momentum on the higher time frame. And then on the lower time frame, do you see any bullish momentum? No, because it is still closing beyond the resisting point. All right. And then here, you can see that there's a high momentum seller. Hence why, when I look at the lower time frame, I know very well that there is going to be another high momentum seller in this position. Why did I give out the sells? Is because I know very well that the prices are bound to fall lower than this. All right, because here is the confirmation that it gave out. All right, here is the confirmation that it gave to us to know, to understand what's going on within today and within the first last action of your trades. All right, no, no what? Right. Okay, so wait, any device on emotion and fear. Device, like that device will remove your emotion and fear. Is that what you're trying to say? Any advice, right? I know. Josh, I know. I understand. I know. But maybe one day they will put a device that you can plant at the back of your head to remove fear. So you can jump down a 100 floor building without feeling fear. You never know, you know. We are living in the 21st century. You never know what's gonna happen in the next century. Hopefully it works that way. But okay, fear and emotion, right? Fear and emotion, it suggests a lot of okay, this is how I control my fear. Okay, let's say I'm scared that it's gonna break this resisting point, right, guys? I'm scared. I'm worried that it's gonna break this resisting point. What I do is I follow the X. All right, the X meaning the actions of the market. I don't let my emotions control them. I don't let my emotions control my trades. I let the actions. Let's say here is the resisting point, right? The resisting point. Okay, so is it breaking out of the resisting point? Okay, no, it's not breaking out of the resisting point. Is it going above the resisting point? No, it is not. But okay, imagine if the prices went up like this, boom, it went up like that, right? And then it rejected and then it went down. It rejected and then it went down. Here, you can already tell whereby it is a manipulation. That you already know that prices have a resisting point in this particular barrier right here, right? But it is not closing above. It is not closing above the resisting point. There's no bullish candle above closing here or here or here or here. So why should we be scared? Yeah, we trade what we see, not what we feel. All right. I know sometimes the market will move like boom, 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 and it will float your account from $10, -10, -20, -30, negative, and then it goes down. Now -20, -10, 0, 10, 20, 30, 40. And then after that, you're like, yay, everything's good, right? So why can't you feel yay all the time? Because you see that negativity. So when you see negativity, you don't focus on that. What you focus on is what you see within the market. All right? Your analysis. That's why I want to teach you guys to be a trader. All right? Because you can control your emotions and you can understand what is going on within the charts. True or not true? Drawdown, scary king. Yeah, drawdown is very scary. Yeah. It's like I always see these memes on Instagram, like of Ronaldo, right? Whenever you are drawing down, you're crying, you're punching the walls, and then when you're in profits, you're jumping, you're, you're jumping, and then you're don't ever follow those emotions. It's just I know it feels that way, but through experience and through time, it will actually make yourself feel better, all right? And you will feel so much better. So guys, I want to ask, what trade do you look for when price in consolidation, but the current candles in creating higher low? So higher lows, when it is consolidation, all right, what you look at, yes, we are going to trade New York session. Can we live trade? No, I'm gonna eat after this, and I'm gonna rest, and I'm gonna give you guys the analysis. But live trading will come soon. Okay, guys, if we have a good week, I will do live trade for the last week. Yeah, I do trade New York session. Okay, guys, is that okay? If this week goes well, all right, if this week goes well, we go live trade next week. Yeah? Yes. Okay. Okay. Promise. I promise. Okay. So now I want to ask you guys one thing. Do you think this webinar today is valuable? Was it valuable to you? If it is, I'm going to post it. Very effective. Okay. All right. So guys, I want to do my analysis for the current market. Okay, let me just do it with you. See, prices are still falling down. Every single time it lands into a supporting line right here, it is not respecting the bullish market at all. Here, this is the next checkpoint, guys. This is current market, okay, guys? Current market. This is the next checkpoint. That's why it's rejecting. You have to wait for a bullish breakout or bullish momentum here. Then only we can decide whether we're going to go for a sell tonight or we're going to go for a buy. All right. So we have to wait for this to buy. We have to wait for this to buy, or we have to wait for this to sell. This and this, not even this. Yeah. Okay, guys. So thank you all for joining me. I'm going to analyze, I'm going to look at my historical data to see whether it is a good point for us to buy here. If it's not, then we're going to continue with the sell, but as usual, we have to wait for the confirmation, okay? So now I'm going to stop the recording and I'm going to post it as soon as it is done uploading, okay? Stop recording.